What if a computer was already making better investment decisions than your financial advisor and charging you almost nothing to do it? Here's the wild part. It's not the future. It's happening right now. Hedge funds run by AI beat the market 3 years in a row, and the same tools they use, you can access them from your phone. Before we go further, this isn't hype. Everything in this video comes from publicly available research, SEC filings, and reports from institutions like McKinsey and Morningstar. I'm not here to sell you anything. I'm here to make sure you understand what's already changing your money, whether you know it or not. So, what even is AI-driven investing? Think of it like this. Imagine you had a friend who could read every financial news article, every earnings report, every social media post about a stock, all at once in 1 second. That's what AI does. 3 things you need to know up front. Fact 1. AI in finance isn't new. It's been used on Wall Street since the 1980s. What is new is that regular people now have access to it. Fact 2. The global AI and fintech market is expected to hit $61 billion by 2031. Fact 3. You've probably already used AI-powered investing and didn't know it. Robo-advisors like Betterment and Wealthfront, powered by AI. Okay, let's get into it. Section 1. AI in portfolio management. AI builds and rebalances your portfolio automatically, and it does it without emotion. Here's why that matters. When the market crashes, humans panic. They sell low. AI doesn't panic. It follows the data. Robo-advisors use AI to do something called tax loss harvesting, selling losing investments at just the right time to cut your tax bill. Betterment claims this alone can add up to nearly 1% in extra annual returns every year automatically. Takeaway. If you're not using a robo-advisor yet, you may be leaving real money on the table every single year. Section 2. AI in stock trading. Wait, does that mean AI is doing all the trading now? Kind of. Over 70% of all US stock market trading volume is now driven by algorithms. A type of AI called a sentiment analysis model reads news and social media in real time. When it detects fear in the language around a stock, it can act before humans even process the headline. Reddit's Wall Street Bets versus GameStop, AI traders were watching that too. Takeaway. You don't need to beat AI at trading. You need to invest alongside it, which is exactly what index funds and ETFs let you do. Section 3. AI in financial research. AI can analyze a 400-page annual report in seconds. You can now use that same power for free. Think about what an analyst at Goldman Sachs does. They spend weeks reading filings, comparing competitors, modeling earnings. AI does that in minutes. Tools like Perplexity, Bloomberg's AI assistant, and even ChatGPT with the right prompts can now summarize earnings calls, flag risks in a company's balance sheet, and compare valuations across sectors. No finance degree required. Takeaway. Before your next investment, spend 5 minutes asking an AI tool to explain the risks. It's like having a junior analyst on demand, for free.
Section 4. AI-powered personal finance tools. Here's something most people don't think about. AI is already inside your bank account. Apps like Clio, YNAB, and even newer features in Chase and Bank of America use AI to analyze your spending, predict cash flow problems before they happen, and suggest where to cut back. Clio's AI chatbot can look at your spending history and tell you, hey, you've spent 40% more on food delivery this month. Here's what that costs you per year. That kind of awareness used to require a financial planner charging $300 an hour. Takeaway. Download one AI-powered budgeting app this week. Let it analyze 1 month of transactions. The insights alone are worth it. Section 5. The emerging frontier. Banks and hedge funds now use AI models that scan Everything from satellite images of retail parking lots to shipping container data to predict economic trends weeks in advance. This edge is coming to retail investors. Keep your eye on platforms that offer alternative data feeds. They're the next frontier of accessible investing tools. Okay, let's be honest for a second. There's a real argument that AI-driven investing is dangerous, and it deserves a fair hearing. The concern: when all the AIs are following similar patterns, they can all crash at the same time. We saw this in the 2010 flash crash. Algorithms feeding on each other caused the Dow to drop nearly 1,000 points in minutes. That is a real risk. Systemic AI failure is not science fiction. But here's the counterpoint. The answer isn't to avoid AI-powered tools. It's to diversify and invest for the long term. A long-term index fund investor in 2010 barely noticed the flash crash by the end of that same day. AI risk is real. Panic selling because of AI risk is more dangerous. All right, enough theory. Here's exactly what you can do today. Action 1. Open a robo-advisor account with $5. Seriously, Betterment, Wealthfront, and Acorns all have no or very low minimums. Let AI start managing even a tiny amount. The goal is to experience it, not to get rich overnight. Action 2. Ask an AI tool, ChatGPT, Perplexity, or Claude, to explain the last earnings report for one stock you're curious about. Type, "Explain this company's most recent earnings in simple terms and flag any risks." Do it before your next investment decision, every single time. Action 3. Download one AI budgeting app, Clio, YMAB, or your bank's built-in AI feature. Connect it to one account, give it 30 days, then make one spending decision based on what it shows you. 3 small moves, real results. If this opened your eyes, hit subscribe, because every week we break down the financial concepts that actually change your life. No jargon, no fluff. And next week, we're going deep on something that almost no one in their 20s and 30s talks about, but every wealthy person quietly uses. It involves a legal tax structure that could save you thousands per year. You don't want to miss